We're at REIT Week 2010 in Chicago, and I'm joined by Connie Moore, President and CEO of BRE Properties. So Connie, how are fundamentals in the apartment sector right now?
You know, fundamentals are clearly improving. They're much better than we thought they would have been at the beginning of the year. I would say multifamily fundamentals are probably fragile. I think that's probably the best way I would describe it. Some of our markets, San Diego, San Francisco, are doing really well. Job growth drives multifamily, and you know, job growth has been tough. And while it is stabilizing, and we're not seeing the negative, job growth numbers, it still creates a little bit of anxiety for our residents. So, but occupancies are above 95%. Pricing power is spotty, but in some of our markets. So, on the whole, I feel certainly better than I did when we put the budget together. And
what about from a supply-demand perspective? Are you seeing a lot of new supply come on the market, or how's that shaping up?
No, it's a lot of demand. A lot of demand for existing multifamily supply. You know, really there was virtually no starts, certainly in the public space last year. The fundamentals over the last 18 to 24 months really haven't sort of dictated that starts would be justified, which sets up very nicely for multifamily REITs over the next 24 to 36 months, just given the length of time through entitlements and the building. If you started something today, it's not going to start leasing until 2012. So, when this thing turns, it could be pretty nice for multifamily because there will be no competing supply.
Right. And that leads into my next question, which is about acquisition opportunities. BRE, like a number of REITs, now has cash on hand. How are you seeing the deal market right now?
We certainly continue to look for existing acquisitions. We've already bought 2 existing properties this year. A lot of interest in multifamily for the very reason that I just mentioned. Lack of supply, the demographics are ahead of us. Most people think that 11, 12, and 13 should be very good years. So his cap rates have continued to compress. Cap rates in our markets are in the 5s to the high 4s. Seems a little hard to believe just 12 months ago where we were. So there is a lot of interest in multifamily. And financing is still available for multifamily, whether you're public or private today. So there's definitely a lot of interest in existing multifamily.
And touching on financing, Fannie and Freddie obviously play a big role in the multifamily sector. How does the potential overhaul there shape up to impact BRE and the whole sector?
Yeah, it's a great question, and there's no question that Fannie and Freddie have certainly been the game changer for multifamily, and they were the game changer for public REITs last year. Most of us took advantage of Fannie and Freddie. An overhaul, to the extent that the overhaul, we all expect additional regulation or additional rules. But if they continue to lend to multifamily, market rate multifamily, I think that that will be good for multifamily. If the overhaul and the regulations, in the wisdom, they've decided they're not going to lend to market rate, that will be a game changer. And what it really means is that multifamily will have to compete like all the rest of the real estate sectors in terms of for capital. And but right now, it's clearly been a game changer for us.
Great. Well, Connie, thank you very much for joining us.
Thank you.
For more from REIT Week 2010, be sure to check out REIT.com.